The time is 2 p.m. You're watching yet another edition of Market View here as Text Talk right here on Eswatini TV. My name is Notile Sitole. Glad to have you on the program. Our focus today is on South Africa's State of the Nation address, expected to be delivered by the President later today. From a fiscal perspective, what could it mean for Eswatini and the region? As the kingdom's largest trading partner, South Africa's tax decisions and economic outlook have direct and indirect consequences for our economy. In 2025, among the highlights of the State of the Nation address was stabilizing public debt, public investment priorities, social welfare and poverty reduction, to name but a few. And in the same year, we also saw the debate around a possible VAT increase in that country, sending waves through businesses and households. For Eswatini, which is closely linked through trade, customs revenue and regional value chains, any shift in South Africa's fiscal policies can quickly translate into real impacts. Today, let's break down some of the expectations, the possible announcements that could impact business and trade ahead of the SONA with our economist, Sanele Sibia. That's a conversation you definitely do not want to miss. But first, some of our business stories. In our business stories, we begin with this. Eswatini Bank has reported that an estimated 1.6 million emalangeni was taken during an incident at its Manzini branch in the early hours of Monday this week. The bank reports that the matter is under active investigation by the Royal Eswatini Police Service, and with the bank fully cooperating. The management has said it is of paramount importance to the bank to fully establish the facts and obtain answers to ensure that appropriate action is taken and those responsible are brought to justice. Eswatini Bank confirms that the cash was accessed through the branch's ATMs while the vault remained untouched and security controls were maintained. Customer accounts and banking systems have not been compromised. Eswatini Bank has stated that it remains committed to the highest standards of security to safeguard customers' funds and wishes to assure all customers and stakeholders that their money remains safe and secure. The Manzini branch is expected to resume operations within the next few days. Acting Police Information and Communications Officer Nosipho Mnguni says the suspects identified as an employee and two others are still at large. Matapa, the industrial hub of Eswatini, is home to more than 700 businesses, according to the town council. As factories expand and production surges, environmental concerns are growing alongside the economy. Today, we examine how the Matapa Town Council and local industries are working to balance economic growth with environmental responsibility, showing that development and sustainability can go hand in hand.
The acting chief executive officer Manqoba Zwane says Matapa's daytime population is more than 40,000. Of these, 70% stream in during the day, many in pursuit of work and economic opportunity in the over 700 industries. To ensure the environment is not negatively impacted as business continues, the acting CEO outlines the measures they are putting in place.
There are only few landfills in the country that are accredited and approved. We're operating one sanitary landfill that meets international standards. That allows them that when they produce waste from their industries, they can use our landfill. Secondly, we've got a lot of waste that is coming now from textile. We have partnerships with organizations now that are converting a lot of the textile waste before it can go to the landfill, including Wanbomaga, who take the waste and do business with that. What happens is if you take textile to the landfill, like in the current status, we will not have the landfill in the next 2 years. But with the conversion of the waste, it is giving us about 10 years more because they take about 80% of the waste that's supposed to go to the landfill. We invested in a proposal that actually gave out an incinerator that is worth 80 million at the moment, built to also handle waste that cannot be destroyed by the landfill. Now, the incinerator can take care of waste that is not taken to the ground for burying. Then we can take it to the incinerator to be destroyed. And you get a certificate again that you've destroyed it under care and other environmental, proper environmental stewardship.
The acting chief executive officer says they have partnered with local industries on waste management initiatives. One of these is Far East Textiles, one of the largest firms in Matapa, employing over 600 Eswatini. The owner, Toki Hau, speaks about the initiatives they are implementing to reduce waste.
We train women, especially from the rural areas, training them into utilizing and making some garments or whatever piece of cloth that they can put together so that they can also make a living and sell. In other words, it's also creating jobs for them.
Business Eswatini's Chief Executive Officer Inathi Dlamini says environmental issues are non-negotiable for companies.
You remember that on COP, was it COP 26 or 27, this country decided to nail their colors to the mast in Geneva on climate change, with stating that this country will reduce greenhouse gases or carbon emissions in this country by over 1 million metric tons. It's been revised now to a higher figure by 2030. But government did state that they will do that by being smart about it, but also collaborating with the private sector in terms of achieving efficiencies, coming out with renewable energy projects of this nature. You have seen them coming online just recently.
The Eswatini Environment Authority's Executive Director, Gcina Dladla, says they strictly enforce environmental laws.
What has historically been used to make sure that industry complies with environmental legislation mainly has been the instrument of environmental impact assessment as well as environmental audits. Simply explained, this is a concept of an assessment where we say, look before you leap, meaning before you make business decisions, look for what can go wrong in terms of the environment so that you can actually prepare how you are going to mitigate the negative impacts of those decisions. So this is at the heart of what we encourage in industry. For both investors who are coming into the country and those who are already in the country. That's why, therefore, the environment legislation that we currently have emphasizes that kind of a practice. Annually, we receive close to 2,000 applications of businesses, small startups, and government projects where this principle of looking before we leap is applied through the environment impact assessment. Just like the EIAs, the environmental impact assessments, the audits would look at the business activities, what inputs, what outputs comes into those kind of operations. As we look at those inputs and we look at those outputs, we then put a measure of saying how are those operations impacting on the environment, so that where we can pick those negative impacts, then we put measures as mitigations.
Women in the Vuganibo Mage Waste Recycling Project say they are not only protecting the environment, but also creating job opportunities for themselves. Under the third nationally determined contributions, Eswatini aims to reduce greenhouse gas emissions by 2.24 metric tons of carbon dioxide by 2035. Reporting, Nelson Dlangamandla, Vuminkosi Nzinisa, Matapa.
And that is your business brief at this hour. After the break, we'll speak to in-house economist Sanele Sibia. Stay with us.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds, full of wonder. You choose a path to awaken your senses, a world to make you look up and realize just how inspiring this life can be. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. Discover just how far you'll go to expand your understanding of life's greatest mysteries. There's just one place on this planet with so much to offer. Now is the time for you to have the royal experience.
Welcome back and thank you for still staying with us. Moving on with the program. South Africa enters tonight's State of the Nation address, SONA, with gross national debt above 70% of GDP and debt services costing or consuming more than 20 cents of every rand collected in revenue. At the same time, economic growth has struggled to consistently rise above 2%, while government has set a target of pushing growth just above 3% to drive job creation and investment. In last year's address, the South African government outlined plans to spend more than 940 billion rands on infrastructure over the next 3 years, with about 375 billion rands coming from state-owned companies. Certainly, this is a massive investment pipeline. And as we look ahead to the 2026 SONA, will infrastructure remain a central pillar of economic recovery? And how will government manage the delicate balance between debt control and growth stimulation? For analysis on expectations and what the address could mean for Eswatini regional trade, investment, confidence and economic stability, we're joined by economist Sanele Sibiya coming to us virtually. Mr. Sibiya, good afternoon. Thank you very much for your time. What should fiscal policy makers and the different countries trading with South Africa really be on the lookout for or watching closely in regards to the SONA?
Hi, Notsile. Good afternoon to you and also to the viewer. So as we head into the SONA tomorrow, I think what we need to look forward to is kind of a balanced tone, a market-friendly tone coming through from President Ramaphosa. And also when you look at this is going to be the first time that we're having a SONA under a coalition type of arrangement. So we do expect a balanced tone regarding that. But then also we do expect President Ramaphosa to speak to the issue of debt and revenue mobilization and building that economic stability. So we do expect him to be pulling out from those gains that we have seen, with during that mid-term budget or the mini budget that Finance Minister Kondongwane actually presented sometime back in September, where debt was contained, government expenditure was relatively on the right path. And those are the gains, and also the revision of the inflation targeting bracket to the 3% with a 1 percentage point diversion. So those are the points that we expect him to delve into regarding the macroeconomic stability of South Africa, which has largely short markets and really just rallied around the South African markets. And also there was that improvement on the rating. So we do expect him to rave about those right now. Like in the first 6 months, that is what they've been able to achieve. And then in terms of the infrastructure, we do expect him to go into that as well. We remember last year, there was that $1 trillion, not trillion rand infrastructure investment package that, the government had touted at the time. And we do expect him to tell us what the plans are around that, because there are still investments that are expected around logistics. We need to make sure, he does need to make sure that the Durban Harbour works very well, the Cape Town ports work very well. The logistics, we do expect, talks around Transnet, Interfreight, railways, when you move things from the shore to within the country. Remember when this GNU came in last year, that was the major talking point around how do we improve the infrastructure. And then also what I'd expect him to talk around is issues of unemployment. Remember last year they posted 500 million unemployment package, So we do expect to see what's going to happen to that and what it mean for domestic industries and how are they going to seek to go around doing that. So those are the major economic points that we expect him to talk around. And it would be folly for him not to talk around issues of relations with New York and Washington and how he's planning to navigate those. But it is a big win for him, the fact that we've seen AGOA renewal and South Africa is on that list. So he is going to talk around those, and it's going to be yet another short-term win for this GNU. And then the biggest that I do expect them to dwell on, which is quite good for for Southern Africa, for the Southern Africa region overall, is the power stability. In the first 6 months of this GNU, they have moved the power availability to around 75% of the time. And South Africa has not seen load shedding happening over that period, but there's also been stability, not only internally in South Africa, but also in terms of the power that they're able to export across the region. So I think it's going to be a relatively easy and a relatively beautiful Sona, because he has so much that he can tap into, albeit the fact that there are water crises. So we do expect him to also talk around that. How does South Africa ensure that there is a sufficient water supply in the Republic?
You've touched on infrastructure and debt, Mr. Spear. Last year, we saw the proposal of a VAT increase in South Africa that was then contested. These were actually was among the aims or part of efforts to raise revenue in South Africa. Now, given that the government did target an economic growth just above 3%, and currently it's staggering at least 2% or below, can South Africa reduce its debt without either raising taxes or cutting spending, especially now, given the performance of the rand against the dollar?
Thank you, Notile, and I think I like the fact that you have touched on the strength of the dollar. That speaks to confidence in the South African market, and also what it does is it makes debt servicing relatively cheaper. So right now, you'd find that it's quite easy for the South African government to service their debts compared to when you needed 19 emalangeni and at times 20 rands just to buy $1. So right now they need 15 rands just to buy $1. So it makes the debt servicing quite cheap. And that when you look at the medium-term development strategy that we expect President Ramaphosa to be pulling from quite a lot when he presents his SONA, it does look into issues of structural reforms, privatizing that which can be privatized, and, running an efficient government. So once you find efficiencies, Notile, you are quite able to make it's going to be quite able to make the rand stretch a bit longer. And at that point, that's where we're going to see whether he's that ability, we're going to see that ability to repay the debt while at the same time, having and freeing up money for these huge and ambitious infrastructure development programs. And then also, if you look at South Africa's medium-term development plan, 2026 to 2029, it does highlight quite a lot of private sector engagement therein to ensure that you can get private sector to come in and develop a lot of this infrastructure on a build and operate type of arrangement. That way, the entire burden to develop the infrastructure of the country does not fall on the government, but it is spread between the private sector and the government. So now, once you do that, you are able to tap into private funds to support infrastructure development in the country. And the fact that we're seeing growth near the 2% target in South Africa, now that's a milestone. If you recall that South Africa has been hovering around the low 1%, 1.2, 1.3% over the past, past 10 years or so, I think. And they've only seen growth until the 2010s, and then thereafter there's been staggering on that level. So it is quite attainable. And the fact that they've been able to finance the government right now without that additional 1% in VAT, it does show that once you can do a lot of pushing around and pulling around, you're able to find the money if you're efficiently doing what you need to be doing.
I appreciate you proposing, Mrs. Spear, that the South African government should be taking advantage of this dollar weakening so that they're able to settle their debts. But with that in regard, what does a stronger fiscal position in South Africa mean for investor confidence in the region, seeing as South Africa is one of the biggest economic players, not only in the African continent, but also just especially in the region? What does it mean for the region? What does it mean also for our trade relations as the kingdom?
So we do expect as a kingdom to get a lot of those windfalls coming through from our CMA arrangement, that is the Common Monetary Area, coming through from the Southern African Customs Union. That's where we get a lot of our revenues from as a country, and also coming through from the SADC arrangement. So there are a lot of arrangements where we are so intertwined and so interlinked with the Republic of South Africa. So stability in South Africa not only anchors, stability in the Republic, but it also anchors stability in the kingdom, because by default, once South Africa starts targeting a lower end spectrum of inflation targeting, then we are expected to follow suit as CMA countries. So now that speaks to overall and broader stability and convergence within the bloc. And then also, once we see the South African economy growing, because whenever you model the GDP growth of Eswatini, you always have to factor in, the growth prospects in South Africa. So a growing South Africa is also going to be inadvertently a growing Eswatini. So that stability in South Africa is going to anchor stability in the kingdom, because if you also look at the anchor in our currency, it is anchored to the rand, and a weaker rand also means a weaker monetary policy position in Eswatini, and a weaker fiscal position in South Africa also means somewhat of a weaker fiscal position in Eswatini through the SACU channel. So we have the CMA channel and the SACU channel that anchor us to South African economy and integrates us to that. So positive news in South Africa are also positive news for Eswatini.
Thank you very much, Mr. Spear. While we still have you with us after the break, we're going to have a chat on markets today. Stay with us.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programmed and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back. In-house economist Anele Sibia still joins us virtually. Mr. Sibia, good to have you back again for market analysis today. So strong employment data usually does reduce near-term rate cut expectations, and we're expecting data to come out in the U.S. What's the anticipation or reaction in markets so far?
Thank you, Notsile. Once again, a good afternoon to the viewers. So as you've rightly put it, the fact that we're getting this employment data coming in at double the expectations, now that requires investors to play around with their expectations of the Federal Reserve and the monetary policy trajectory within, the U.S. economy. So now what we've seen happen across the globe, across the board in the U.S. was a 66.74 point loss coming through from the Dow Jones Industrial Average, and a 36.01 point loss coming through from the Nasdaq Composite, and a 0.34 point downgrade coming through from the Standard & Poor's index for the top 500 companies there. So largely driven by the fact that we are seeing this requirement for rebasing in terms of the interest rate expectations coming through, from the US. And then in terms of when we move across to, to Europe across the pond. The mood is relatively good in Europe, largely driven by earnings sentiment. So what we're seeing today is the markets in the UK moving away from, trading the news around whether Keir Starmer is going to stay for long or is going to move, just to focus largely on those earnings. We've seen the likes of BAT, which is British American Tobaccos, announcing a 1.3 billion share buyback and a massive 2% surge in the likes of Schroders there. So that's where the markets are focusing on, earnings and news around the market, just moving away from the politics until and unless there is going to be a new shift around where the debate is going. And then in Germany, again, markets are focusing on earnings. We've seen, the figures come out of Siemens showing that they are setting an aggressive target for the first quarter of 2025 or 2026. So all of those issues have actually done well to show up the German economy. The CAC 40 there gaining some 49 points, continuing to be driven by those luxury stocks that we are seeing moving markets within the French economies and the French zone. So when we come into Asia, the Nikkei remains in record levels, and we've seen it cross the 58,000 mark in today's trade, only to settle at 57,639.84 at market close, losing some 20.7 from its data intraday highs. So now that's largely driven by the fact that markets are still celebrating that landslide victory by Prime Minister Takaichi, Takaichi, on Sunday there. And then when you come into Hang Seng in Hong Kong, there are a bit of pressures, to sell off in Chinese tech firms, given that hawkish sentiment coming through from the US, and also given those numbers. So once that interest rate stays higher for longer, then that doesn't bode well for the exporting hub of those tech commodities into the US. And the Shanghai Composite Index there remaining relatively steady at 4,134.02 in terms of all share volumes, just gaining some 2.03 points. We can see that the movements are not massive, but they show two signs of optimism within the Chinese economy. What the Chinese economy is waiting for right now, what Shanghai is looking out for right now is, are we going to see a massive stimulus coming through from the Chinese government? So markets have been cautious ever since the beginning of the year while we wait for that stimulus to come through. And then when you look into the Johannesburg Stock Exchange, the Johannesburg Stock Exchange has gained 697.54 rands in today's trade overall in terms of share volumes, largely driven by the fact that we are expecting a very well-grounded SONA, and the fact that President Ramaphosa already has quite a couple of things that he can start celebrating in the short term, issues around load shedding. And further, the support in gold is also assisting that rally, and we do expect it's going to tick up even further once we hear what infrastructure infrastructure package is going to be in them. The Eswatini Stock Exchange remains stable. And in terms of gold, given that those jobs figures and the interest rates staying higher for longer, we're seeing gold taking a bit of a hit, losing some 14 points in today's trade because, if interest remains higher, then, assets and other interest-bearing commodities become lucrative. In terms of Brent crude oil, we're seeing a bit of a knock there, but still remaining on that 68 level, close to that 69 and heading for that 70 until we see a resolution of that Iran crisis. And then in terms of the exchange rate against the dollar, we're seeing a bit of a weakness. We've been trading at the 1582 type of region in today's trade until midday when we made that quote. And then also in terms of the euro, we are below that 19 region, but showing a bit of weakness at intraday trade, and against the Japanese yen at 9.63 9.63 rands per yen. So now that's largely driven by the fact that we're expecting the SONA and a bit of a letdown in the price of gold. Thank you, Nathan.
Thank you very much, Mr. Sibia, for your insights. That was in-house economist Anele Sibia sharing insights on the day's trade. Otherwise, this has been Market View ERS Text Talk right here on Eswatini TV. From myself and the crew, thank you very much for your company. Take care.